Katie, thank you very much for joining us today. You have a very interesting background in that you're a research analyst, not for one, but for two different sectors, uranium and lithium. And given that we're at the World Nuclear Symposium, I got to ask you about uranium. What is your view on the current uranium price, and where do you see it going in 2025?
Yeah, it's a good question. I think first we need to clarify what uranium price we're talking about. If we're talking about the spot price, I would argue that it's been incredibly volatile, especially over the last 12 months. If you think of last year, we had a large run-up in pricing over the fall, end of the year at $91 a pound. It felt like that momentum was going to continue. It did into January, February. Uranium prices peaked at 107. We've now since seen a pullback to $80 a pound. I think what's important for everyone to understand is that the spot market you're talking about, and over the last 12 months, it's been moving on very little volume. So because it's so thin, you've seen the price move from 107 down to 80 on 250,000 pounds. It's these low volumes that are causing this volatility, but I do think it's an important market that we need to talk about, because being on the sell side, when I'm talking to a lot of investors, the spot market is the price they focus on, even though it is not the fundamental price in my view. So the spot price, I think, could continue to be volatile, but I think directionally will likely continue its trend upwards. And in my view, that will be driven by some of the momentum we're starting to see in the term market. So when I'm talking about the term price, what we've seen there is a continued grind higher over the last couple of years. And even year to date, while volumes are down about 70% relative to last year at this time, what we've continued to see is price discovery to the upside on very little volume. And I think that's something that's going to continue. So right now, the term price is around $79 a pound. When I talk to industry participants, a lot of discussions are happening at higher levels. So I think of the current term price as a backwards-looking historic indicator with a lot of discussions happening at higher levels. So my view is the term price over the next year will likely continue to grind higher.
And let's talk about your valuation method now. When you look at a producer like Kazatomprom or Cameco, how do you value those companies versus a developer like NextGen or Denison?
Yeah, no, it's a good question, especially because there are very few publicly listed producers. That will change over the next 12 months. We're seeing a number of projects ramp up, so I think that will be good, especially for investors who are looking for, pure play producer exposure. For the producers, Cameco, Kazatomprom, we value them on a blended method. So we look at discounted cash flows, PNAV, and then we also look at current EBITDA multiples, and we use that blend to create our target price. When we look at developers, which is the majority of our coverage, just given the nature of the equities, we do a lot of valuations using discounted cash flows, taking the existing mine plans, I would say increasing capital costs, operating cost estimates where we deem fit, as well as extending timelines where we think it's appropriate. And then we use a PNAV multiple for that as well. So we use 1 times NAV for developer coverage, and then the producer coverage, we take into account current multiples.
And what long-term uranium price do you use to value companies?
Yeah, we're using $90 a pound long-term, so slightly above the current term price. In our view, that's underpinned by two things. One, where we view the current cost curve as being today, but two, where current term contract discussions are happening. So if I think about this time last year, term contract discussions were happening at, floors of 50, ceilings of 80. Today, we have floor discussions happening around spot, $75, $80 a pound, ceilings, $125, $130. So directionally, I think that's going up, and I think $90 a pound long-term is actually a quite conservative estimate for what the pricing could be.
So we've seen some pressure in the spot price this year. It's down 15%, give or take, on the year. A lot of equities are down that and more. Do you see good value at these current levels?
Oh, I
see. Equities that you cover?
I see immense value at these levels. I think there's a number of namers that I cover that are trading at the same levels as they were this time last year when the uranium spot price was $60 a pound. And you can see it in the implied pricing for the names. So when I look at some of my advanced developers, let's say NextGen, Denison, these great projects that are on the cusp of getting their federal permits, I have those names implying a uranium price today in the low 60s. 3-4 months ago, before the recent pullback, they were, low 80s, more in line with what spot pricing was at the time. So yeah, I think there's good value in the names.
So I want to ask you about M&A now. We've seen a lot of very aggressive M&A transactions in many parts of the resource sector. Exxon just acquired Pioneer for $60 billion. Newmont acquired Newcrest for, I believe it was 15 or 16 billion. And BHP just spent $4 billion on Filo, which is at an elevation of 15,000 feet and won't be built for another 10 to 15 years. Why haven't we seen some aggressive transactions occurring in the uranium sector? Why hasn't somebody spent $5 billion or more on a transaction?
Yeah, it's a good question. I would say twofold. We have seen some transactions happen. They've been at smaller levels among some of the developers or projects that are looking to restart. We've seen some transactions that are more broader fuel cycle. So we can't forget about Cameco investing or buying, their portion of Westinghouse. I think that was a massive transaction for the sector. And I think that's something that Cameco is still absorbing. So I think that also leads into the question of, well, why haven't we seen some of the bigger players in the uranium space look to acquire down cap? I think it's twofold. It's one, they already have, great assets that they're in the process of ramping up as it pertains to Cameco, but also they just did the Westinghouse transaction. So that was a large transaction for them. I think they're, getting to understand that business and grow that business, and that's their primary focus right now. In addition to the fact that they do have a lot of brownfield projects that they could look to push forward. So I don't think they're in a position where they're desperate to acquire something at this point because they already have enough growth going on. Not to say they're not looking, but I think that's why we haven't seen M&A year to date. I do think that going forward, though, it wouldn't be surprising to see some other majors, maybe majors outside of the uranium sector. I think some of the large diversified miners take a look at the sector. I think they see the global transition to decarbonization. I think they see how nuclear has now been viewed as an important part of our energy mix on a go-forward basis. And I think as some of those companies look to green, like you mentioned BHP buying Filo in the copper space, I think that hints at what some of these major diversified miners are looking at. So I do think, there's an opportunity that some of those players could be looking at uranium more seriously.
So I made mention of the fact that you also cover the lithium sector. And as you know, lithium is down 70 or 80% from its peak. Many stocks are down 80, 90% or more. Do you see a risk of uranium following the lithium price?
Great question, because it's a question I actually get a lot. Like a lot of investors have asked me, is this the next lithium? In the sense where lithium prices skyrocketed and then they went completely down the other way. And that created a lot of volatility, and it's created a scenario where the sentiment is so negative in lithium, and I don't know if that's going to change anytime in the near term without, a significant increase on the demand side or a significant recovery in pricing. Why is uranium not the next lithium? I think it's twofold. I think on the demand side, what you had in the lithium market is year-over-year variability in electric vehicle sales growth. So 70% one year, 30% the next year. Those are big numbers. Depending on the magnitude of the growth year over year, it could put the market in surplus or deficit. When you look at nuclear, you look at uranium, the growth is stable. So you're seeing it's positive, but it's stable. It's 2 to 3% growth year over year. It's quite predictable. I don't think you're going to get that variability on the demand side. At the same time, it kind of couples with the opposite on the supply side. When I look at the lithium market, it was incredible how much supply could come into the market when pricing rose. So when you saw the 100% increase in pricing, you saw Chinese lepidolite projects come online. You started to see direct shipping ore out of Africa. You're continuing to see some of those projects out of Africa ship material. It was quicker to find, quicker to permit, quicker to bring online. I think the complete opposite is the case in uranium. What we've seen is in uranium is during the bear market, we saw a decade of underinvestment in the sector. The sector is very much feeling the pains of that now, to the point where it's difficult for the incumbent producers, Cameco or Kazatomprom, to grow their production. I think we've seen that with Kazatomprom's most recent results. But beyond that, there are a lot of great development stage projects, but they still need to go through permitting, they still need to go through financing, they still need to get built. And building a large-scale uranium mine is not always an easy thing. And the industry is also heavily regulated. So I think there's not this pocket of supply that can quickly come online in uranium like there was in lithium. So to me, they're very different markets.
Katie, as we wrap up, you and your team market all over the world, meeting with investors, South America, Australia, Europe, the U.S. What's the sentiment like right now? What's the interest like in the uranium sector?
I would say cautiously optimistic. I think there are a lot of investors who over the last couple of years have done the work. They understand the fundamentals. I think they've been a little bit frustrated about the lack of momentum we've seen in the trade over the last couple of months. I think that's two things. I think it's summer doldrums, but I also think the broader market is not helping. So there has been sort of this risk-off sentiment. But I think everyone is optimistic. I do think there is, based on the fundamentals, a higher, I would say, likelihood the prices are going to go higher as opposed to lower. So I just think it needs to catch a little bit of momentum, and then you'll see, more of those investors getting back into the sector. One thing I would also note is, one, it's broad-based, like you said, it's global. We see a lot of interest out of LATAM, out of Australia, out of Canada, the United States. But what you're also getting is some new large generalist institutional capital who are looking at the space, who haven't really been that active in the last 3 years. So I think if we do get more momentum in the trade over the course of, maybe the back half of this year into 2025 as term volumes increase and pricing continues to recover, I think having some new players enter the space could be really impactful in a sector that is quite small by global standards.
Well, that's a great overview, and I want to thank you very much for spending time with us today, and enjoy your time in London.
Yeah, thanks for having me.